We are living through historic times in the precious metals markets. The silver price and the gold price could very well go to levels that we could only imagine just a few short years ago. We're going to look at all the reasons why in this live stream video. Have you heard? There's a lot of analysts out there right now calling for $100 silver, $200 silver. I've even heard a few talk about $500 and $600 per ounce silver. The sky is really the limit. Hey, our first target is $85 per silver. There's our cute little silver bear with his $85 blindfold on. We'll take that off. We'll have a big party down here in the basement when silver hits $85. And the way things are going, that could happen sooner as opposed to later. I have one question for you. Are you ready? And I have one statement for you. Thank you for joining me down here in the basement. It really is a big deal. When you choose to come down here, give us your time. We appreciate you. Please subscribe to the channel. That's free. Okay, leave a comment in the comment section and share it with whoever you like. Let's get more people involved in the world of silver because there's a lot to be excited about, including this. Let's go out to CNBC and take a look at what happened in the silver market on Friday. There we are, $40.26 on Friday in the futures market, guys. But what's key on this chart that I want to show you is this. Okay, when you look at this goes back to 2011, and when you look at 2011, these are quarterly closes, so it doesn't even show the big spike up to $50 during that time period. But look how fast silver went up during that period. And then, of course, it went right back down. What I want you to look at is what we've been building now for probably almost 10 years. From around that 2017, 2015 range, we have had a nice, steady progression in the silver price. What that means is there's been a lot of support built underneath where we are now. It hasn't been a rocket ship ride up, right? We weren't at $20 2 months ago and at $40 now. No, it's been a nice, general, steady ride up like I've talked about, like we talked about many times. Sure, we hit some bumps in the road, right? But that got rid of the weak hands and brought strong hand people into silver. So I believe we are set up on this chart to continue to do well. Other key points to remember about this big silver close on Friday, that was the end of the month from a technical perspective. That's a very, very important thing. And it was the first time since 2011. Do you remember that? Woof. Seems like only yesterday. However, almost 15 years that the silver futures market crossed over $40 per ounce. So we got a lot to look forward to. And let's just take a quick look at what happened back in 2011 when silver went on that rocket ship ride. I'm going to share this screen with you right now. And this comes from, let's give proper credit where credit is due. This comes from Gold Ventures. And it talks about when silver went on that massive run back in 2000. I mean, look at how exaggerated and how fast that move up was. You know, could we see that again? Yes, we could. I'm going to tell you a little bit later in this video what I'm expecting over the next month out of the silver and gold price. But it sure feels like, and we're going to talk about the COMEX, we're going to talk about the LBMA. There's all kinds of craziness going on right now. But one more thing we want to look at quickly is the dollar index, because that has a lot to do with what we can also expect here in the future. The DXY closed on Friday right under 98, 97.86. There's a one-day chart, but what we really want to look at is this long-term chart because of one reason and one reason only. If you go back to 2001 and look at the DXY, it was probably, about 120? From 2001 to 2011, the dollar went into a bear market, the DXY. During that same period of time, that's when the silver price went from $5, okay, and added a zero at the end, all the way to $50. Why is that important? Because right now, we are breaking down below this key 100 level on the DXY index. We've been below now for 3 or 4 weeks, feels like, and it can get down as low as, or even potentially lower 75 where it's been in the past. And again, remember, one of the major things that fueled that rally from 01 to 2011 was a precipitous decline in the US dollar. And let's just say this. We have a current administration in Washington, not a political show by any stretch of the imagination, that has pretty much telegraphed to us that they're in favor of a weaker dollar. Buckle up, guys. There's a lot more good to come in the world of precious metals. But somebody's not happy about this. You ready for a little humor? This is a good one. Vince Lancy shared this one, and I think it definitely needs to be watched by us. These are, let's get up here and give him his proper credit. VBL's Ghost, this is Vince Lancy, one of the smartest, sharpest minds in the precious metal sector. He says, I forgot to read it to you. Hold on. Sorry, guys. Indian women, upon finding out that their husbands took profits in silver last week. So the Indian women found out that their husbands had sold the silver and weren't participating in this recent rally. And this is... Don't sell your silver! Don't sell your silver! Well, who knows, right? We never know where the price is going to go. Let's go out and look one more time, because it bears repeating. Eric Young, King Kong 988 on X is telling us $50 silver equals 45 years in the making. And guys, don't forget this, the most beautiful thing happening right now in the silver market, the cup and handle pattern. For those of you who are new, because we have a lot of new people, this is 1980 when silver was around $50 per ounce. This is 2011 where it got up there again, like we just looked at. That's the cup. This is the handle. And it is like one of the best textbook cup and handle patterns in the history of the world. They're saying that this one will be talked about for the millennium. And we are participating in it. I know that on some time frames, I think maybe quarterly or in semi-annually, it officially has already broken out. So we'll see from a candlestick perspective. It's just going to be absolutely exciting. The other interesting thing that is going on with this right now is that embedded within the handle of the cup and handle, can't really see it too well here, but there's also a couple smaller cup and handles, kind of like those Russian nesting dolls, double whammy bonus, however you want to say it. Now, look, the COMEX and the LBMA, I've been following the silver and gold markets for decades. And there are some people who dig into this minutia data that comes out of the COMEX inventories, the LBMA, all these different relationships. I've been digging into it this weekend. I'm not going to, I don't want to say bore you, because some of you really enjoy it, and that's great. But the takeaway from all this is that there's two big things going on. The inventories at the big electronic exchanges, the COMEX and the LBMA in particular, aren't at oh my God, they're out of silver levels, but they're getting to some, what I think can be qualified as critical levels. The other thing is that the relationship between those markets is also acting funny. Let's go take a look at a bit of commentary on that very matter. This came from, again, Eric Young. Thank you, Eric. King Kong 9888. This guy, he says, Billionaire Bob did some hardcore research, and it looks like they are taking delivery of physical silver at the COMEX this August end of month instead of rolling over. So typically in the futures markets, they just roll their futures over, roll them over, and never actually take delivery of the metal. And that is changing. That's one thing that's a little bit different. And some people are throwing up red flags, talking about how it could create a squeeze. I don't know. But this guy, Billionaire Bob, dug in. And so have other of the big analysts in the gold and silver sector, and are pointing out that this may be the case. But there's something else going on as well out there, and that is what's called the EFP, the gold and silver EFP. That stands for Exchange for Physical. It's an acronym, which is the price difference between the futures market in New York and the spot market in London. There's some strange behavior there as well. Apparently that spread is kind of breaking out, and possibly some people, I got to say it, hold on, listen up. Some people are saying that could be a signal that somebody's getting squeezed, short squeeze. So we'll see how that all plays out. But at minimum, we know that the paper markets are a bunch of bunk. Okay. The inventory levels are strained, and the relationships between the markets are becoming strained. And we also know that there are some indications that there's some unusual activity on the delivery side at the electronic market in New York. So who knows how this all plays out, right? I'm not going to make any solid predictions based on that, but I will share with you in a little bit what I think is going to happen here in the next month with both the gold and the silver markets. Let's see what Rashad is telling us. More good news. Everywhere we turn right now, it's good news. This comes from our friend Rashad, who we follow closely, a big bull within the precious metal sector. He's saying, attention, spot gold is finally breaking through a 4-month plus resistance standing from April 22nd. So from April 22nd on, we had this resistance. The move is taking place on the last working day of August. This breakout could spark a 15 to 20% move. And you know what's good for gold is good for silver. Buckle up, okay? And there it is on the chart. Wow, look at that. Looks like 1, 2, 3, 4. This is the 5th time the gold is attempting to break through those levels. You can see on the right side it says this is happening. So we're going to keep a close eye on that. Now, Jesse Colombo at the, the bubble report. Let's get that pulled up for you. Shared some really fascinating charts about what's going on in gold. And again, guys, what's going on in gold is going on in silver. This is from the free section of his, what are those things called? Substack. You can subscribe to him. He's very popular, very knowledgeable, one of the leading analysts now in both the gold and silver market. But he says gold and silver are starting to break out. And I want to show you a couple charts that he shared. This one here is gold futures. See if I can get that to, yeah, I can. These are gold futures. Okay, as you can see up here in the upper left corner. All right, and we had this long period of time of consolidation. And as Rashad said, resistance as well. But the key thing to look at on this chart is the triangle pattern, the blue lines, the compression. Okay, it tried to break out once. Okay, boom, and the triangle got smaller and smaller, and now it broke out again, breakout number 2, which is a very, very good thing. Now, what's interesting is if you look down here, he points out light volume, right? Usually when you have a breakout, you want to see that done on high volume. And in this case, it was on low volume, but Jesse brought up a very, very good point. This week is kind of considered to be the last week of summer. This is a holiday weekend in the United States for those of you who aren't in the U.S. So traditionally, the volume is much lower during these periods. I think next week will be critical, but I am fully expecting that next week we're going to have more a solid growth within both the price of silver and gold. And I'll tell you why here right now. Okay, let's go over to Kitco and look at the biggest factor right now that is going to be pushing the gold and silver price. The biggest kind of, weather pattern or favorable, there's a lot of things that are pushing gold and a lot more that are pushing silver right now. But from a kind of macro level, Niels Christensen shares with us the gold price ending August at record highs. All eyes now on 3,500. But there's a couple paragraphs in this that we want to talk about. Michelle Schneider, chief strategist at MarketGate, said that her buy signal in gold was triggered last week following dovish comments from Jerome Powell. In his speech at the annual central bank symposium in Jackson Hole, Powell said that a shifting balance of risk in the economy may warrant an adjustment in monetary policy. Make sure I got you on the right screen, which I do. Okay. Powell showed markets that he is not overly concerned with getting inflation back down to 2%, she said. He is now more focused in the slowdown in the economy and the labor market. But I thought the economy was great. except apparently from people I'm talking to, nobody can get jobs right now. Okay, not a good time to be looking for a job. According to some economists, Powell's stance was confirmed on Friday as inflation pressures rose in line with expectations. So we got the inflation numbers on Friday. Inflation is still way above the Fed's target, but we also know, right, because I'm talking to people in the construction business, in the IT business, in the executive recruiting business, that the economy is showing some pretty serious signs of serious slowdown. The Fed is in a position now where they need to do two things at the same time. They need to raise rates to control inflation, but they also need to cut rates to stimulate the economy. Which do you think they're going to do? Well, Powell told us they're going to cut rates, basically. So what's going to happen to the silver and gold price over the next 2 weeks? All right, 2 weeks from Wednesday of this week. So in about 2.5 weeks, we're going to get the Fed's latest monetary policy decision. They're going to cut rates. Leading up to that, what I believe we're going to see are much, much higher moves in the silver price and the gold price. I'm not giving financial advice. I'm not a financial advisor. However, I will say that I'm going to be looking to maybe trim maybe a quarter, maybe a third, if I'm correct, and we do go through this 1.5, 2 week period of increased prices in the metals and the mining stocks. I'm going to look at trimming maybe a quarter, maybe a third of the mining stocks. I think after that, we could get a pullback and then head back up through the end of the year. Again, I don't have a crystal ball. Okay. Usually I'm right, but often I am wrong. So it'll be interesting to see how that plays out. But if you want to get your hands on some silver right now, please check out channel sponsor First Mint. Okay. They're a silver mint in Las Vegas, Nevada, but they are owned by First Majestic Silver, who mines silver in Mexico, ships it to Las Vegas, Nevada to First Mint, and First Mint transforms that into world-class silver bullion products, and then it goes straight to you. Remember all that stress we were talking about at the COMEX and the LBMA? Well, look, this is the Las Vegas round from our friends at First Mint. It is absolutely beautiful. This is the freshest silver on the market, right? Just dug up out of the ground in Mexico. Then it made a little trip to Nevada, and then it came here. The COMEX and the LBMA, they didn't touch it, but they've got a great selection of products. They're all original. They're all beautiful, world-class products, great prices, free shipping on orders over $199. And, right, there's a discount code. VIPRB, that'll get you a discount when you decide to go check out First Mint. I love their products. Their Buffalo Round, their Year of the Snake, the Year of the Dragon. They've got bars. They've got it all. Check them out here. I'll show you their website and see if we can get this up. There we go. I think you can see me and the website. Yep, there you can. Right over. Oh, no, wait a minute. Right over there, guys. That's First Mint. Hail to the Chief. That's their 1 ounce Buffalo Round, which I absolutely love. The Indian design. There's the Las Vegas Round. It'll go through them all. Keep looking over there. There's the Year of the Snake. Okay. Like I said, Year of the Dragon, and also a great selection of bars and some other products as well. I also want to say thank you to channel sponsor First Mining Gold. Okay, that's a stock that I've owned for years before they sponsored the channel. Okay, they are a development stage gold mining company in Canada. So they've got the gold, it's in the ground, it's been defined. They're working through the permitting process right now. They have 2 huge projects, Springpole in Ontario and Duke Parquet located in Quebec, and another project named Cameron that's also in Ontario. You can learn more about them at firstmininggold.com. Like I said, they're moving through the development stage. A lot of big catalysts to come. And I'll tell you what, these big mining companies, they've not been investing in the development and exploration side of their business. They've been more focused on paying off debt over the last 10, 20 years. Their pipelines are going to be running dry, and there's only a few huge, big projects in great jurisdictions like First Mining Gold has. I'm not a financial advisor. Do your own research. But I do appreciate the sponsorship from First Mining Gold. It helps me be able to come down here and hang out with you guys. And is there a good reason? Look, gold's the granddaddy of them all. Okay. I love gold. I love silver, as you know. But is there good reason? I mean, is the world changing? Wait till you see this next chart. It in uncertain terms tells us that we are living through historic times for the precious metals. Let's there's the Las Vegas round. I'm sorry, you're the snake, but I want to show you this chart because this one I think says it all. Lawrence McDonald says hard assets, gold versus financial assets, paper certificates. Foreign central banks now officially hold more gold than U.S. Treasuries. For the first time since 1996, this came from Tavi Costa. Here we go. Look at this chart. See if I can get this up. There we go. On full screen for us to look at. As you can see there, the yellow line would represent gold holdings as a percentage of foreign reserves. The blue line represents U.S. Treasuries. Look, okay, what about 1996? That flip-flopped and central banks were holding more U.S. Treasuries. That went on for a long time. What would that be, 20 years? But look at where we are now. What does this tell us about what the world's most sophisticated financial institutions are doing? They're allocating more and more to gold. Okay, these type graphs that go up by back to 1970, as you can see, right, they don't like flip-flop. Most likely what we're going to see is a continued upward trajectory in that yellow line and apparently a continued downward trajectory in the blue line. But when we think about who the central banks are, again, these are the smartest guys in the room. It's not the hedge funds. It's not the venture capital. The smartest people with the most inside info about what's going on in the world's financial, economic, and monetary systems are the central banks. Like, don't listen to what they say. Don't listen to what Jerome Powell says, right? Watch what they do. And that chart right there with that blue and yellow line shows us in no uncertain terms that the smartest people around are moving to precious metals. Now, we know the Russian central bank, and there's some speculation about the Saudi Arabian central bank, are also adding silver to that mix, right? Will silver be remonetized? There's some people that think that it will. We know that the industrial usage and the precious metal usage alone gives more than enough support for much higher prices. It's going to be so much fun to watch. Hey, I really appreciate you joining me. Don't forget, subscribe to the channel, please. It really helps out. Susie and I are raising the family off our YouTube channel, so we appreciate your support. We appreciate your camaraderie. We've been through a lot together as precious metals investors, and we got a lot to look forward to. I want you to be well, okay? And I will look forward to seeing you, yes, you,